If we think about longer term, right, we have to think about what are the structural forces that causes inflation trends to pivot or shift. And so the way I go about that is what caused prior decades to have ultra low inflation, what's same and what's different structurally. I count policy actions by the current administration as having an influence in the intermediate term, but unless those policy actions are a permanent part of the way the U.S. operates, then structurally, I don't necessarily take that into account on a longer term. Structurally, it's going to be about demographics. It's going to be about technological factors, which are still pointing toward lower overall structural inflation as we look out 5-10 years from now. But the components that have certainly changed over the last 5-6 years includes aspects such as a shift from globalization more toward nationalism and regionalism, shift much more toward employment as a foundation, which also leads to more resistant inflationary trends overall. And I think one of the factors that we posited that changes is aging populations in developed markets, particularly the U.S., historically has a deflationary trend because people consume substantially more. But one of the things that's changing is the cohort of population that's aging today and that will age in the future have a much higher propensity to consume. So you're not going to get the same level of deflationary effect inherent in demographic. So the net result is somewhat higher inflation overall, but that doesn't necessarily mean that term premium is going to be reset much higher.
Stephen, does it feel like the bond vigilantes are yet going to have the final say? And let's bring it to Scott Bessent's confirmation hearing and what sort of tone he strikes on government spending. Is that going to move bonds?
I think it's fair to say that the way that we're running fiscal deficits in the U.S. and the level of debt that's being accumulated is problematic. I think the question that no one has a clear answer to is at what point does it become a more meaningful problem? With respect to the comment about bond vigilantes imposing discipline, I think that's a fair statement when it comes to most of the rest of the world. But the U.S. is fairly unique in the sense that as the only reserve currency, they have the latitude, at least for the foreseeable near term, to run a structural deficit and not necessarily be impacted in the same manner as they would be if they were any other country on earth. And so what I mean by that discipline is the rise in interest rates that's taken place in recent months, and if it rises a bit further from here, I don't believe it's going to change fiscal policy that's going to come out of the administration, right? What will potentially pivot and have an impact is to the extent that increasing interest rates causes more broad-based economic impact on the economy, and then the fiscal policies may need to adapt to that. But the long end of this is that I think that as a government, from a pure P&L standpoint, there needs to be a way to try to control the growth in the deficit, and moreover, if you look into the future, the percentage of government spending that has to be dedicated to debt service means that fiscal expenditures are going to be more dedicated toward unproductive expenditures.